What's up, YouTube? Eric here. I've got 5 stocks that I think are attractive buys at these prices and lower. And before I go into those stock picks, just want to give you a quick update here. So CPI, Consumer Price Index, that did come in a little bit hotter than expected this morning. So the Consumer Price Index increased 0.4% for the month. Remember, this data is lagging and 3.7% from a year ago. And that's above forecasts of 0.3% and 3.6%. The major driver here really came down to shelter costs. Of course, gas prices are a little bit higher as well, but shelter costs were really the primary driver. So shelter is about 1/3 of CPI weighting, and that accelerated 0.6% for the month and 7.2% from a year ago. Energy costs rose 1.5%, including at 2.1% pickup in gasoline prices. So we've talked about it on the channel, how gasoline prices have come up a little bit from the recent lows here, but still lower than they were, of course, last summer. Historically, though, gas prices are a little bit elevated. Now, during the pandemic, we had 0.2%. This is back in May of 2020. This rocketed up over 8%. And then in June, we got down to 3%, but we've spiked since June. Now we're sitting at about 3.7%. Now, if you want to take a positive from this, even though CPI was a little bit higher than expected for this month, if you look at the annual inflation measures, this will edge lower. So you look at 3.6% for a headline versus 3.7% on expectations. Of course, we still have a couple more reports here. And then the core is down nicely. It's at 4.1%, and that's down from 4.3% on the annual expectation. Now, of course, those numbers are still higher than the Fed wants. The Fed wants inflation at 2%. And so the question here we've talked about on the macro, what's going to happen with interest rates? Are we going to raise one more time in November? I think it's probably a 50-50 ball. And we could see some more volatility depending on what happens. If the Fed raises rates, of course, you're going to see a spike in treasury yields. You're going to see a spike in mortgage rates. And we've talked about it many times in the channel, how that's going to impact the macro, the consumer, which is 68% of GDP. Now, looking at the QQQ, this is a NASDAQ 100 ETF. We had $354, and then we kind of rocketed up and then back to $351. So that's giving you a double bottom here, and you've seen a nice bounce off that double bottom. We're getting some resistance here around $375 today. This R2 is $381.70. That'd be the next resistance level. Then you've got $392.96 on the R3. The previous R3 was $400.84. And we've talked about this in the channel, but the QQQ needs to break 404 to get past those November 2021 highs. So next I'll cover 5 stocks that I think are attractive at these prices and lower, and I actually bought 2 of these names today. I added more shares. Now, before I cover that, I want to stress the importance. A lot of people think that just because they buy a lot of shares that they're getting more of a company. If you have a fractional share or 1,000 shares, let's just say you have $1,000 invested and one is 1,000 shares and one's 0.1 share. If your $1,000 goes up 10%, you made $100 regardless if you had 1,000 shares or a fractional of 1 share. Now, psychologically, we as humans, we think we're getting a better deal. We're owning more of the company if we own more shares, but understand that that is not the case. So I make videos like this because I know a lot of people like to buy stocks that are, under $5, under $10, under $20. And do keep in mind that under $5 is going to be considered a penny stock, very volatile, generally very speculative. So 2 of the companies I'm going to cover today are profitable, have PE ratios. The other 3 are more speculative, and we're even getting into the penny stock range on a couple of these stocks. So when you think of speculative, you have to manage that risk. Generally in Fired Up Wealth, we say 5 to 10% of a portfolio. Don't go too heavy on spec. And speculative stocks, well, they can be 10x or 0. It's a boom bust type of play, and make sure you manage that risk according to your personal risk tolerance, your suitability blueprint, and so on. Now, this first stock is sitting right at $20 a share, and I just covered this recently in the last couple of videos. If you go back 2 videos ago, I did a top 7 stocks to buy for the month of October. I did a deeper dive on ACM Research, ticker ACMR. This stock is up 10 or 15% since I bought my first lot. I was hoping it would come a little bit lower so I could add more shares, but do keep in mind we're going to have earnings here October 27th, so not 2-3 weeks away, and that could move this higher or lower. So for me personally, I have a starter position. If it goes down, I want to add more shares. If it rips, high quality problem to have. This is not a must own stock. It's not a core position by any means. So if you are going to buy this, make sure you're just getting an entry position. Be very careful with earnings coming up. This is elevated. I generally don't like to buy stocks when they're ripping upwards. This one is very bullish. A lot of hedge funds, a lot of institutions are jumping on this story. And this stock was just $5.46 here back in October of 2022. So that's a pretty aggressive run. You have to be a little bit careful. Now, with that said, it's a 19.55 P ratio, and this is 12 months trailing. And I do like this story. Again, go check out that previous video after this one if you want more information, more due diligence on this company. This is only a $1.2 billion market cap, so it's pretty small. And as I mentioned, 52-week range, so the 52-week low, 546 just back about a year ago in October, and the 52-week high is 2087. So we're pretty close to that 52-week high now. And ACMR does have about 5% short interest. Price to sales ratio is a 2.6. Price to book is a 1.74. Now, PE for this year's estimate, 15.8. Next year's estimate on the PE, 14.8. This is according to Fidelity. The next stock, the ticker is HCP. So this is HashiCorp, and their products enable collaboration and automation in IT. They enable users to define infrastructure as code from development, test, and security through to deployment logic and infrastructure configurations for operations. So that's a mouthful. HCP supports numerous cloud and private infrastructure types. So you're talking about on-prem, you're talking about in the cloud, and hybrid cloud. Now, this is an open source company. Okay, so this is very different than, say, a CrowdStrike. A CrowdStrike is a true SaaS model built in the cloud for the cloud, has a high margin profile. Being open source means that originally they offered their products for free. How'd they make money? Bolt-on services and so on. But they're pushing more into cloud service offerings. In other words, offering their products as a cloud solution, software as a service, but it's still a small part of the business. It is growing. 26% year-over-year growth, $143 million. This has a huge total addressable market, but it's not profitable. It is more speculative. Net dollar retention, 124%, which is solid. Now, if you look at the AR customers, the annual recurring revenue with $100,000 or more, you're at 851 versus 734 just in Q2 of FY 2023. Now, take this with a grain of salt. I agree that it is a generational opportunity, but it's not necessarily the SAM or serviceable addressable market here. So talking about epicenter of the shift to cloud, the big three cloud revenue, AWS, Google Cloud Platform, Azure, Microsoft Azure, $157 billion. And they're saying that their TAM for calendar year 2026 is $70 billion plus, but that's not their SAM or their serviceable addressable market. So just from a high level here, you've got connect, so that's networking, secure, security, and then provision or operations. And I think this slide really paints the picture well. So this is the opportunity at each layer. At the top on the left here, you can say database, messaging, runtime, and then the infrastructure platform. So you've got networking, security, and infrastructure. On the right-hand side, you can see which products fit into these different needs. So Nomad, Console, Vault, and Terraform. Now, I'm not going to go into a ton of detail on this video, and we have covered HCP in the past, but I do think the company is an important part of, when you look at just cloud in general, I think this could be a big player. There's a lot of opportunity here. The ecosystem kind of speaks for itself. 3,000 plus providers and integrations, and this is just for Vault and Terraform. And this is a great slide showing that shift from open source to commercial scale. Now, HCP is not quite $20 or less. I did buy more shares this morning, a little bit lower than where it's trading at right now. I think if it does break $20, there's no guarantee that it will. If it does break $20, I think that's a very strong opportunity. Is that even possible? I think it is. You look at the S2, it's a little bit over $20, around $21, but this S3 here is down here, $18.21. So if it did drop any lower into this level off of earnings or something like that, that would be a great opportunity. Do I like the stock here at $21.50 or so? I do, and I bought some shares this morning. The next stock is Every Holdings. The ticker is EVRI. Now, this is a very interesting company. It actually is profitable, has a PE ratio, a very attractive valuation in my opinion. So the deals with gaming, casinos, not only machines, but also fintech, and there is some recurring revenue in the business as well. So if you've been to a casino, you might have seen some of these games, maybe even played some of these games yourself. The one that really got my attention was Press Your Luck a couple years ago. My wife and I went to Vegas. It was a great game. I was kind of interested. I was like, who even makes this? Didn't realize it was publicly traded. I did a deeper dive video on the channel here, and you can go check that one out after this video. Every does continue to build new games all the time. Here's updated for sale cabinet portfolio and some newer games here on your screen. And it's not just the premium video machines like I just showed you. There's 86 total themes releasing in 2024. So 40 standard video, 20 standard mechanical, 16 premium video, and 10 premium mechanical. There are several growth opportunities that excite me about this company longer term. One is mobile. I'll get to that here in a second, but also horse racing, video lottery terminals, and international markets. Talks about Australia end of 2024, additional markets 2025 and beyond. And for digital revenue growth, you can see it's grown nicely since 2019. And you got 89 casino sites and 3 major social casino partners. This is gross gaming revenue showing some of the competition here. You can see Every here at 4th. And this is big. UK UK, Europe, and Latin America expected just next year, 2024. And the addressable markets, it doesn't mean it's the SAM, but the addressable markets for these three regions totals $21 billion. So received the UK license in 2023. A Malta license is also expected shortly. I think this could be massive for every. When you think of mobile platforms and mobile gaming on your phone, it talks about play anywhere, offsite promotions. They also have loyalty points. This company really has this flywheel that involves loyalty, so rewards points. You also have the fintech solutions, recurring revenue, like I mentioned earlier. This is talking about a true all-in-one mobile platform. So deposit, play, earn, and reward. And this is the evolution of Every's fintech solutions. And they've really built out a nice suite in this area. So the fintech digital neighborhood, you've got loyalty, payments, and RegTech. This is a good snapshot showing you the personalized guest journey. And it's really everything from the front of the house and back of the house. Growth opportunities, win new business. So since 2022, Every has won 37 new casinos. Also, of course, new products and services, sports venues, the mobile solutions, international expansion, and more. This is just the US. This is digital neighborhood expansion opportunity only for the United States, not even talking about international. And this isn't a very big market cap. I'll show you some of the financials and specs here in a second. So this is another stock on this list that I added shares to just this morning, under $12 a share. Now, this is a 10.55 P ratio. This is 12 months trailing. Market cap on this, $1.09 billion. So profitable small cap type business. Of course, if you go into recession, the fear here is that companies like this will be impacted because people don't have money to spend and to lose on gambling. Looking at the 52-week range, this morning was the 52-week low at $11.92. That 52-week high, $19.85. And this does have about 3.75% short interest. And the stock is down 27.65% over the past year. Price to sales ratio, 1.35. That's attractive. Price to book, 4.50. Now the PE for this year's estimate, this is on Fidelity, a 12. Next year's estimate, 10.8. Now you never buy a stock, of course, just off analyst ratings. But this is very interesting to look at, guys. 5 analysts cover this. All 5 are a buy. This is rated a strong buy. The average price target, $21 a share. That has a 72.91% upside. The highest price target, $24 a share, and the lowest is $20 a share. It's trading right now at 12 bucks. So this one, like clockwork, this is algo driven. It bounced exactly off of this S3 range, just under $12 a share this morning. Now, could the stock go lower? Of course it could, but you look at the valuation, you look at the potential. I think if you're buying this stock and holding it for 5 years, you probably do pretty well with it. And I think it's important to mention that here, guys. If you're buying any of these stocks in this list, it's for long-term investing. Generally, we're looking at 2025 or beyond, 2030 or beyond. So this is a long-term investment. You know, it's trading around 10 PE ratio. I like this company, but you have to really get into a bull cycle for this stock to go higher. And you say, well, we're technically in a bull market. Well, really have 7 or 8 stocks that have driven the market higher. Small caps have been destroyed, and this is one of those names on the list. So I like this stock right here, $12.15. Could always go lower, dollar cost average. You also have earnings season here coming up. This one reports here November 7th, so less than a month away. So this next one, you either love it or you hate it. This is a very polarizing stock. This is a spec stock, so we're talking about 10x or 0. And reminder, if you're buying spec, manage your risk. Make sure you don't have too much spec in your portfolio. I generally recommend 5 or 10% at the most in spec stocks. This was a spec, and it's one that's been thrown out. And I've covered this video several times on the channel. I even interviewed the CEO. I encourage you to go watch that video after this one. You'll learn a lot about the company. Now, INDI Semiconductor is still telling us they plan on being profitable here at the end of the year, and that's not that far away. But recently, it's got a lot of bad press, and essentially saying that they're trying to grow it at any cost and that they're not focused on profitability. I don't necessarily agree. Now, this isn't a dirt cheap stock by any means, even at these levels. So just looking at it really quick on macro trends, I mean, if you go back to March 31st, 2021, had 11.2 price to sales ratio. Today, 4.59. So again, not dirt cheap, but it's the cheapest it's traded at. And it has been growing at 90% plus. This is showing what I'm talking about. This is on Seeking Alpha. Revenue growth, 97.29%. Forward revenue growth, 95.33%. So have they made some acquisitions? Have they diluted shareholders? The answer is yes. Now, I mentioned I interviewed the CEO on the channel. Now, the leadership leadership for INDI and a couple of the board members come from Skyworks Solutions. And they did an amazing job growing that company and getting those Apple partnerships. So this is an experienced management team that gives me more conviction. But with all that said, guys, I mentioned earlier, this is a spec stock. A lot of people invested in this stock. It went up to $11. They didn't sell, and then they're frustrated because now they're red on it. And this stock could go lower. I mean, it could go down in the fours. For me, I just keep buying more shares. At a certain point, I'll have to, turn off the valve, but I'm not overweight. I have about 1.3% of my primary taxable brokerage in INDI as spec. And that is the highest spec concentration that I do own. And I could be wrong, 10X or zero. It could certainly go out of business. For me personally, I have high conviction in this stock. I thought it was a pound the table buy even in the sixes, and here it is at $5.30. It might get down in the fours. It's still a buy. My thesis hasn't changed. The macro has changed, but if I'm thinking 5 and 10 years out as a spec stock, I still like INDI Semiconductor right here. And remember, I mentioned earlier, under $5, now you're talking about a penny stock. This is a spec play. Now I've got one more stock to cover, but before I go on, guys, if you're new here, please do me a favor, subscribe to the channel, click that bell for notifications. And if this video is helpful, please drop me a like and drop me a comment. I appreciate your support very much. And no pressure here, but if you're trying to be a better investor, you're trying to learn, you want to surround yourself with like-minded individuals that are trying to be long-term investors. You want to drown out all the noise, the clowns, the drama, the spam. We're offering a 7-day, 1-week free trial, no strings attached to Elite. You can go sign up right now, watch exclusive videos, listen to exclusive podcasts, even join Discord and talk to us, me as well as community members from all over the globe. And some of these investors in our community have 30, 40 years experience, more experience than I have. Many of them have much larger portfolios than I have, but we also have brand new investors. We have people that are in college that are 19 and 20 years old that have $1,000 Robinhood accounts. So we cover the spectrum from small accounts, new investors to large accounts, seasoned investors. We've got doctors, lawyers, plumbers, factory workers, you name it. Check us out. Go to patreon.com/firedupwealth. This is something I want to point out. I think a lot of people miss this. If you remember, Virgin Orbit went bankrupt, went out of business. So we talk about 10X or zero. Here's an example of one of those that did go out of business. So Rocket Lab, ticker RKLB, acquired select assets in Virgin Orbit's bankruptcy. So these are just select assets, not everything, at favorable cost. So they bought these assets pennies on the dollar. A $16.1 million purchase enables significant savings for Neutron and supports future scaling. Now, we've done a lot of due diligence on Rocket Lab in Discord. We've done some exclusive videos in Patreon that cover Rocket Lab in detail. We have a space exploration video from our Fired Up Wealth conference earlier this year that really dives deep into this stuff. If you want to go check that out, you can go sign up again for free and you can go watch that video. I think there's massive opportunity here, guys. The total addressable market is massive, but this is another spec play. It's a very long-term play. I think you're probably looking at 2030 or beyond. But if you want to invest in the pure play, the best company out there, well, SpaceX, but it's private. You can't invest in it. This is trying to be vertically integrated. I believe in the management, and I think it's one of the better spec plays out there that you can invest in. It's trading under $5 a share, so it's essentially a penny stock. Now, this is the most expensive stock that we're going to cover on the list today. The price to sales ratio, if you look back at end of 2021, it was a 23.62. That's very expensive. Now, it's technically not the cheapest it's been because back here earlier this year, March 31st, 2023, price to sales ratio was 8.42. This is when we were buying it in Discord. Right now, price to sales ratio is under 10. I do like this company. It is expensive and it is a very long-term spec play. Now, every single Wednesday in Patreon Discord, we do something that we call Chart Day. That's at 9 o'clock a.m. Eastern. It is recorded. We also do live stream audio podcasts Mondays and Fridays. So you have a live stream Monday, Wednesday, and Friday every single week at 9 o'clock a.m. Eastern, and those are recorded and posted on Patreon. When you see orange, that's a previous chart day. Yellow is going to be the most recent chart day. We haven't covered in a little while, but we said in the last video, we covered Rocket Lab on the channel. Preferring the fours was even in the $3 pre-market. So this did get down below $4 here after that recent launch that wasn't successful. I prefer this stock. Obviously, the lower the better, but I do like it better in the threes. But at $4.40, I do think it's attractive, and it absolutely can go lower. I want to put it on your radar. I think it's a stock to buy at these levels and lower. It's trading at $4.41. So again, penny stock. This S2 here is around $3.50, and this S3 is all the way down here under $3 a share. Is that going to happen? Probably not, but could it? The answer is yes. I hope this video is helpful, guys. Again, if you're new, please subscribe, click that bell for notifications, drop me a like, drop me a comment. Have a great rest of your day. Take care.